What's going on, guys? How you doing? Today, I have a special guest. I'm going to introduce him. His name is Court Crofoot. He's a mortgage broker with Cardinal Financial. I've known him for a while. I met him at one of his great events that he does when he puts out a mass caravan and broker tours and broker events, things like that. So I wanted to bring him on to help us understand financial rates and analysis and break down what a mortgage actually looks like. So let me introduce you guys to my buddy Court Crofoot. Here he is.
Howdy, Cody. How are you?
I'm doing well, Court. How are you?
Better than I deserve. Thanks for having me on today.
Thank you. Hey, I was just giving a quick introduction, and one thing I want to say is I have a number of colleagues and friends that are throughout the real estate industry in different aspects, and I really wanted to bring guests onto this show. And Court jumped on the opportunity and was so responsive, and I think that's really important to understand about his character. He may be very busy, but he's also very helpful. And
well, thank you. I appreciate that.
Yeah, not a problem. So what we're going to do today is we're going to run a quick search, and I've already kind of ran it and narrowed it down to a property in Tempe. Tempe is a very hot market for a couple of reasons. Number one, because of ASU. Number two, just because it's right in the middle of the Phoenix metro area. So what we're going to do is we're going to look at a property. I'll give you some details, some photos, and an overview of it. And then Court's going to break down the mortgage side of that. Sound good?
Let's do it, my friend.
Good deal. So I can't see you anymore, so just yell at me if you want me to stop. But one thing I'll point out, this is listed by my friend Jake, and this was an accident. I just found this home while I was searching right before this. And so, hey, shout out to Jake Crawford. Bring somebody to look at this property for him. This is a great investor home. This property was just recently flipped. It's less than 2 miles from ASU, and it's a 3-bedroom home.
That's a beautiful place.
It's a mid-century modern property, right? I mean, it has that slump block brick, but then they put in the red door and the modern gray and white touches.
Yeah.
You'll see that there's some areas on the inside that still can be updated, which means there's still room for ROI, but in reality, it's the equity that they're building in this property because the area is just skyrocketing. And also it backs into a park, which is going to be an ideal situation for either a family or anybody else. See what I meant, Court, in the kitchen? They can still update the cooktop and the cabinets and some stuff like that, and even the tile.
Now, Cody, you mentioned ROI, and this is a great looking spot right here. I just saw something this morning that really, really caught my eye coming out of our friends to the north up in Colorado, specifically the Denver metro area, where they've now hit a median price of $510,000 for the city of Denver as a median. And I thought that was really interesting, and it grabbed my attention, obviously, for the headline that it is, but also it reminded me just how well positioned we are. Denver's a great city. Don't get me wrong, but our median is nowhere near 510 right now, and it just really gave me a lot of reassurance.
So what you're telling me and everybody listening is that we have a whole lot more room for growth and for upside potential here in Phoenix, and we're just getting started.
Yeah, I mean, it really just resonated with me and put things in perspective. How much larger we are, how much more business friendly Arizona is as a state, and all the business, the biomedical business, everybody that's coming here. It just, it's exciting. That's the end result, and that's what I'm hoping to share. Is hopefully everybody else watching is excited about our future as a state, not just in housing, but overall. Just really exciting time to be living in Phoenix, Arizona.
Well, yeah, I agree with everything you said. I'm a 4th generation native Arizonian on both sides of my parents, and so I'm obviously a big advocate and believer in Arizona, and I think what's happening is there's a lot of factors that are driving people to explore where should we live, where should we go, and then when they show up in Arizona and they realize really there's 3 hot months, and the rest of the year is it's really a beautiful state. We have everything you want with everything you don't want, like natural disasters.
Yeah, that's how I ended up here. Less natural disasters than California.
That's right. And so I think there's a lot. But so when we look at that property, Court,
yes,
$379,000 is the offer price. So for our calculations, let's call it 380, right?
Sure.
I want to look at an average buyer with a decent credit score. What's their down payment? So what are they going to come out of pocket with when they buy this home? And then what do they need to have planned and stored away to be paying their monthly payments with?
Cool. Well, let's run through that. And again, just go into an article that I recently saw, and it's very relative to this. Millennials surveyed by the National Association of Realtors, the respondents, over 70% still believe that you need 80% down, or excuse me, a 20% down payment for an 80% loan to value to buy a home today.
That's right.
That's a shock. That's a shocker. I mean, that's 7 out of 10 believe that you need 20% down payment. And the truth of the matter is that this property would fall underneath Fannie Mae, Freddie Mac conforming loan limits, which then brings the ability to put as little as 3% down. A 3% down payment, which on this home is going to be less than $11,500. $11,370 to be exact.
Okay.
That would be the down payment requirement from the borrower or borrowers to come in, put that down. Now, Fannie Mae, Freddie Mac allow that to also be gifted. So in that Tempe area, if mom and dad or aunt and uncle are looking or willing to contribute a gift, those funds can come from an outside source, such as a family member, or even an employer under the right circumstances can gift that money. But a 3% down payment, you can borrow from your 401k. Cool thing about borrowing from your 401k that a lot of people don't realize, you pay yourself back the interest.
Right.
So it's kind of a cool little deal. And most plans have an allowance for withdrawal without penalty to be utilized for the purchase of a home. So there's some really crafty ways that we can, together with the borrower, come up with sourcing their own down payment. But let's just look at that. Let's assume a 740 credit score.
Okay.
It's not at the very high, the high end of the scale is 800 plus. 740 is going to get you the best rates available. And let's look at it two ways here. So I want to show our audience. Let's give a scenario where our client has that credit score, but is maybe a little bit more cash strapped. They are seeking a gift. With that credit score, with as little as 3 down payment, that high credit score is going to give a lot of opportunity for a reduction of the mortgage insurance rate.
Okay.
So I want to show, and I want to make sure everybody's hearing this loud and clear. So $11,370 down. Let's say that, Cody, you've been able to negotiate and the seller's paying the closing cost. Okay.
Okay.
So they're coming in with $11,370 down, and they don't want the mortgage insurance on top of that payment. So we look at a different way. At 3.5%, they could get into that home today with no private mortgage insurance. It would be lender paid at 3.5%. We're looking at a total payment with taxes and insurance on this property right around $1,800, $1,825 a month, no mortgage insurance.
And that's it. That's out of just end of the day, they're paying about $1,800 a month.
Correct.
And that's at a 3.5% interest rate.
That's at a 3.5% interest rate, no mortgage insurance. Let's flip that around though, and let's say that our client now has a little bit more cash to work with. They still want to only put the 3% down, but they have the flexibility. They have some additional funds. Today we could offer 2.625% interest rate on that. They buy out their own mortgage insurance up front instead of paying it monthly, which would cost on this deal with this credit score about 1% of the loan amount.
Mm-hmm.
Okay. They would be looking at a total payment with taxes and insurance right at that $1,600 mark at 2,625. That's pretty incredible. I mean, we gave two scenarios there, 1,800 versus 1,600, both of which still had the same 11,370 utilized for down payment.
Mm-hmm.
It's pretty cool. I just don't. Well, you tell me, Cody. What can you rent this house for?
That's exactly what I was just going to bring up. Is both of those are good scenarios, but what's important to understand is both of those scenarios is well under the rental rate, because I think for a 3 to 4 bedroom home in Tempe, it's not out of the norm to be around $3,000 a month. I think conservatively this property rents in the mid twos, call it $2,300 to $2,500 a month for a property like this that you're sinking your money into every month.
Yeah.
And you said something about when you're able to pull money out of a 401k, you're essentially paying yourself back that interest. Well, guess what? You're essentially paying yourself every month you pay a mortgage, because you're going to sell this house and you're going to get that money back. So
sure.
Investment vehicle, sure, maybe it can be. A bank, a savings account, it certainly is.
Yeah.
And a tool to grow. Yeah.
I like that.
And then a tool to grow and live and not pay somebody else.
Yeah.
So,
it's in a super cool area. Now, question for you, just thinking about the demographic down there, who may be buying this home, who may be watching, again, a place like this, at this price, there are all kinds of things that I can do with, maybe it's a student, and that student's folks are looking to buy them a home instead of doing student housing or paying the, much higher rental rates. So they decide to purchase. That could be done as an owner-occupied purchase in the child's name, with the parents as a backer on the loan. What's a room rent for down there? I'm guessing $800 to $1,000 a month with utilities, right? I mean, I got to be close.
Easy. You're easy.
Now all of a sudden that payment's, $600 to $800 a month for the owner renting out a room. I just look at the opportunities for the youth today, our millennial generation. It just excites me very, very, very much to see the opportunities.
When I was in college, I was lucky enough to have my parents help me acquire my first property, under the guise that I had 2 roommates fill the extra rooms, and I was able to use their payments to pay the rest of the bills. So, yep. To your point, that's exactly what I would do. There's a lot of people that could buy this home. The smart person would be the college freshman or the college sophomore who's going to be here for 3 to 5 more years, buys this property right now, stacks in the rental rates, so he's paying his bills, and then when he sells this home, we're buying it at $380 now. In 5 years, you sell it for $450, $475 maybe. That's how.
Or who knows? Maybe that person holds on to it and rents it out as a rental property for other students. And next thing you know, you look up 20 years later, and you've got an asset that's paid off or close to paid off that's worth $500,000. I mean, it's just strategic planning.
Yes.
Not drifting, as I like to say. If you drift, you don't know where you're going.
Have you read a book by Napoleon Hill called Outwitting the Devil?
Of course I have. Of course I have. Good book.
We can have that talk another time. That's good.
Sure.
All right, Court. Hey, I know you got a lot going on. I hope you have a really successful day, and I'm very appreciative that you wanted the show with me and talk through this. So
love to do it anytime. Again, Cody, you have a great day as well, and hopefully you find somebody out there that can pick up this great opportunity for you.
Thanks, Court. Talk to you, man.
See you, guy. Bye.